My path into fintech started in 2002. I was running my own firm at the time called Village Ventures, and the dot-com boom had just burst, and I was questing about for a strategy. And I noticed that very few people invested in financial services despite what looked like a huge opportunity, so I made that my business. As we sit here today, Bitcoin is up $100 or 50% in the last 3 weeks. So you're catching me at a good time relative to Bitcoin. Well, the price of Bitcoin's been a roller coaster, reaching heights of $1,100 and plunging down to $200. In early November, it's up above $300. But it's been a challenge for companies that are predicated on the value of Bitcoin. And we've seen a real movement away from Bitcoin specifically to this architecture called the blockchain. I adopt let's call it a passionate wait-and-see attitude. I am definitely not sitting on the sidelines. About 2 years ago, 2.5 years ago now, we partnered with an entrepreneur named Barry Silbert to create something originally called the Bitcoin Opportunity Corporation, now called the Digital Currency Group. And through and with Barry, we've gotten both financial exposure but also visibility into the leading companies in the ecosystem. I think it's potentially the single most important thing to happen in fintech, but at the same time, the bumpy road is going to continue. This will not be a straight path to world domination, and there are cautionary tales in the history of innovation where sometimes these things don't end up mattering. So we're paying a great deal of attention, supporting entrepreneurs that are trying to radically change things, but with a healthy dash of skepticism thrown in. I view my job as trying to figure out, as they say, where the puck is going and trying to skate there. I'm a deep believer that in the US economy, where 60% of B2B payments are made by paper check, that there are enormous problems to be solved, and there'll be big companies created in solving those problems. You'll hear the banks and the broker-dealers complain about regulation. My view is that regulation is in fact their best friend. The government has set up a system of rules that ensure that the incumbents will be in business forever. Because the alternative for the government is try to regulate the Wild West of fintech. And instead, they've forced all of our companies to do business with the incumbents versus replace them. So in my view, it's the incumbents that figure out how to partner, that recognize that in certain aspects of their business, they're going to be the dumb pipes. Dumb but well-remunerated pipes. And allow innovation to flourish at the application layer, driven by entrepreneurs. I think that those banks will do perfectly well. I think fintech is a durable sector. I think all you have to do is look at the GDP of the United States. Look at those industries that are largely built on technology and which are above 10%. And it's really healthcare and financial services are the one that stick out. Healthcare has been a mainstay of the venture capital industry for 35 years. It took financial services a lot longer to get to the point where entrepreneurs were drawn to it. But I think once this flywheel has started turning relative to the increased expectations of consumers and businesses relative to what they get from their financial services providers, I don't think that's going to go backwards. So I think there's going to be meaningful roles for entrepreneurs, and that gives me a raison d'etre because usually entrepreneurs need money at some point along the way.